All right, welcome. Have you ever felt like investing is this super complicated secret that's just for the wealthy? Well, this explainer is for you. We are going to break down exactly how you can start building your own wealth one simple step at a time. So let's pull back the curtain and really see how it's done.
So it really all starts with this one big question. How do the rich not only get rich in the first place, but how do they stay rich generation after generation? It's not about luck, and it's definitely not some impossible to understand secret. It all comes down to one fundamental principle.
And this is it. This is the golden rule. The core idea is to keep your initial money, your capital, always working for you, while you just live off the profits it generates. This isn't just a tip, it's the fundamental operating system for how wealth is built and maintained. It's the engine, and today we're going to show you how to build one for yourself.
Okay, first things first. Before you even think about investing a single dollar or a single sadie, you need a map. And that's exactly what an investment plan is. It's your personal financial roadmap.
Think about it. You wouldn't start a huge road trip without knowing your destination or having a GPS, right? Of course not. Investing is exactly the same. A plan gives your money a purpose, a direction, and it stops you from making those emotional, knee-jerk decisions. This is the first real step in moving from just earning money to strategically building wealth, the way the rich do it.
So how do you actually build this roadmap? Well, it's these 5 simple steps. You got to ask yourself, what are you saving for? Is it buying land, retirement, something else entirely? How long do you have to get there? How much can you realistically set aside each month? What kind of investment actually fits that goal? And finally, how are you going to check in and make sure you're still on the right path? Answering these questions is your first and honestly your most crucial step.
And here's a look at how this all works in practice. Just notice how different goals need completely different strategies. A shorter-term goal, like buying land, might use something like a mutual fund, but a super long-term goal, like retirement, that could make stocks and bonds. And an ongoing emergency fund needs something safe and steady, like a treasury bill. Your plan has to be unique to your goals.
Okay, so you've got a plan in place. Now it's time to understand the engine itself, how your money actually truly grows. This is where we get into the really exciting stuff, the mechanics of wealth creation. Pretty much every investment you make is going to go through this kind of life cycle. You start small in what we call the accumulation stage. Then your money starts to grow, and this is the key. It starts to compound on itself. It eventually hits a peak value at maturity, and finally, you get to the harvest stage. That's where you can either use the profits or, even better, reinvest them to start a whole new cycle. Understanding this long-term view is absolutely key.
Now, this brings up a really big choice you have to make. Do you want to be super hands-on, picking and choosing individual stocks? That's what we call active investing. Or do you want to invest in a fund that simply mirrors the market, like an index fund? That's passive investing. And the source material is really clear on this. For most beginners, passive investing is way less stressful and often gives you better results in the long run.
Okay, this chart right here, this is where the magic really starts to happen. Let's say you invest $1,000 and earn 10% each year. If you take out your profits every year, you'll have $1,500 after 5 years. Hey, not bad at all. But just look at what happens if you leave those profits in the account. Let them grow right alongside your original investment. You end up with $1,610. That little difference, that is the power of compounding.
So let's just focus on that for a second. That extra 110, that is free money. It's money your money earned for you. This is the power of compounding. And frankly, this is the real secret to how the rich stay rich. Over decades, this effect can turn small, consistent investments into a serious fortune. It is the single most powerful force in all of finance.
Knowing the mechanics is one thing, but long-term success, that really comes down to your habits and your mindset. So this section is all about building the discipline you need to win the long game.
What's the best way to stay disciplined? Make it effortless. Automation is your absolute secret weapon. Set up an automatic transfer to your investment account for the day you get paid. Use apps that make it simple. By taking the decision-making out of it each month, you remove emotion and you turn investing into a simple background habit, kind of like brushing your teeth.
And hey, when you automate, you're probably using this super powerful technique called dollar cost averaging without even realizing it. All it means is that you invest the same amount of money every single month, whether the market is up or down. This is brilliant because you automatically buy more shares when prices are low and fewer when they're high. It takes all the guesswork and the anxiety out of trying to time the market.
This table right here, this is everything. Because your biggest enemy in investing isn't the market, it's your own brain. This emotional discipline is the invisible wall that protects wealth. When fear's screaming at you to sell during a crash, the smart investor holds on or maybe even buys more at a discount. When greed tells you to chase some hot stock, they stick to the plan. Mastering your emotions is way more important than being some kind of financial genius.
And of course, you need to know if your plan is actually working, right? The simplest way is to calculate your return on investment, or ROI. It's just your profit divided by what you initially put in. This simple little formula helps you track your progress and see if you're on target to hit your goals.
So you've made a plan, you've started the growth engine, and you've built good habits. Now the final piece of the puzzle is all about protecting what you've built.
Just think of this as the defensive driving of investing. You need things like insurance and an emergency fund, so you're never forced to sell your investments at a terrible time. You diversify so that one bad apple doesn't sink your whole portfolio. And you always use trusted platforms that are regulated by the proper financial authorities in your country. That's how you avoid scams.
Knowing when to sell is just as critical as knowing when to buy. And the reasons for selling should be logical, not emotional. Are you selling because you've finally reached your goal? Awesome. Is it because the investment itself has fundamentally changed for the worse? Okay, that's a valid reason too. But selling just because of pure panic? That's almost always a huge mistake.
And this quote just drives that point home perfectly. Temporary market drops are normal. They are part of the game. Selling in a panic just locks in your losses and makes it totally impossible to benefit from the recovery that always comes eventually. Patience isn't just a virtue in investing, it's a superpower.
So, let's bring it all together. The entire strategy for building lasting wealth, the exact strategy the rich use to stay rich, can be boiled down to these 3 simple but incredibly powerful actions. Invest consistently. Reinvest your profits to let that compounding magic happen, and never, ever stop learning. That's it. That's the formula.
Look, knowledge is useless without action. So here's your challenge for this week. Tonight, seriously, write down your financial goals. Then, sometime this week, open an investment account and set up that first automated transfer, even if it's a small amount. Keep learning, and then teach what you've learned to someone else. It's the best way to make it stick.
And we'll just end on this thought. Don't wait around for the perfect time to start, because it just doesn't exist. The perfect time to take control of your financial future is right now. You have the map, you have the tools, now go and get started.